Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Individuals, not banks, will support gold in 2020. Will the producers turn into the consumers and the consumers turn into the producers, the people like you and I that stack the silver, that hold it? We will be the ones that have the power, as the people that need it will be buying it. Also, why do central banks own so much gold and silver if it's not used as lawful money or legal tender anymore? It's interesting, especially since we know that the banks are in a lot of debt. Is this their way of still preserving something that holds its value? Also, another article talking about COVID-19, aka the coronavirus, and the aftermath and its ramifications for gold. These two articles will be in the description if you want to check them out yourself. I think this will be some interesting conversation, some interesting discussion, as these are definitely some interesting points and angles to look at, especially with everything going on in the world of precious metals. So before we start, I just want to say, do one thing for me. Go ahead and smash that like button. Make sure you subscribe, because I post daily videos. I posted a video earlier today. Go check that out as well. So, one of the biggest arguments for gold bulls in the last couple of years has been the steady, substantial increase in gold purchases from sovereign entities. I'm referring, of course, to the buying binge that several of the world's central banks embarked on into 2018 and 2019. See, there are signs, however, that the ardor of these banks toward gold is cooling. And this has led many investors to worry that gold is losing a major long-term support. As I'll show here, though, this likely won't be the case, as individual investors will step up in gold purchases and pick up the slack they left behind by reduced bank demand. News headlines concerning central bank gold buying were frequently seen last year, but in recent months there has been a lot of notable paucity of such headlines. Indeed, banks have seemingly been on a hiatus ever since the coronavirus commandeered the spotlight. This slowdown in official gold demand isn't surprising, obviously. However, given that central bankers around the world have been forced to concentrate all of their recent efforts on stimulating their economies in the wake of COVID-19 pandemic. So they're not really focused on buying silver and gold right now, because they gotta pump these economies full of money. Banks haven't completely stopped shopping for gold, though. However, despite Russia's recent announcement that it would suspend gold purchasing beginning April 1st, central banks were still net buyers of gold in February. Central banks in February collectively added a net of 36 tons of bullion, which was nearly a third of the amount in January's totals. According to the World Gold Council, the WGC, however, gold buying among the banks was 52% lower on a year-over-year basis. According to the WGC, Turkey, Russia, Kazakhstan, and Qatar are the biggest buyers for February, while Uzbekistan was only a seller, or was the only seller. So you can see the year today, only 5 countries that have increased gold reserves by at least a ton, and it's Turkey, the Russian Federation, United Arab Emirates, Kazakhstan, and Mongolia. So, interesting. So the past 2 months clearly suggests gold continues to be an important component of sovereign or foreign sovereign reserves, despite heightened levels of demand in recent years. And while we believe central banks will remain net buyers in 2020, it's reasonable to think you may not see as much buying as we did over the past 2 years. But remember, there's that effect that happens, that herd mentality that happens. Even if banks won't step up to the plate, I know all this new money from these new investors, these new individuals, these new silver stackers, these gold stackers that are going to be coming into this play, is going to happen. Why? Well, because everyone wants a little piece of silver once the price starts rising. It's that simple. Everyone does. Just like $18,000 Bitcoin, Coinbase was the #1 downloaded app. Your friends, family, neighbors, whoever is going to be trying to get their hands on some silver, digging through their jewelry change, their jewelry drawers, looking at, people are going to be coin roll hunting. It's going to be insane, and that's because silver is profitable to them, kind of like we already see it is to us right now. Well, they just haven't really seen that yet. So anyways, The recent surge in volatility levels across the global financial markets, is a big reason why central bankers may be reluctant to make new commitments to gold. I agree with the WGC's assessment that gold, or that until global volatility diminishes, will likely see less central bank participation in the gold market in 2020 compared to prior years. That makes sense. If not central banks, then where will gold's primary support come from in the months ahead? The answer isn't hard to predict. Individual investors who will be accumulating gold at an accelerating rate since December will be 2020's biggest buyers. And not only that, individual investors, but you also have, the companies. If you want the newest iPhone, 5G technology, EVs, electric vehicles, gold and silver are going to still highly be on the forefront of buying. Normally, it would be troubling for a contrarian's perspective or retail participants to be leading buyers of gold bullion. But as the case in the wake of 2008 financial crisis, the public's unmitigated level for fear over a very uncertain economic future will be intense and unrelenting. Further, when the public is all in on a given asset, that asset's price can move higher in explosive fashion over a period of several months or just several years. And that's definitely in the case with something as a small market like silver. Gold's a much bigger market, so if silver does that, it's going to really pick up. This was not the case for gold in 2009 to 2011, but also for equities in 1997 to 1999. With that said, we look for increasing demand for physical gold among individual investors in the coming months as the coronavirus crisis continues to boil. So, I'm just going to go over the conclusion now because I still have more to talk about. So, in conclusion, even without strong central bank gold purchases, unremitting worry over the extent of the global pandemic will fuel increasing safe haven demand for physical gold among investors or individual investors in 2020. Institutional players, too, will likely be enticed by the prospects for higher gold prices based on the metal's impressive relative strength versus equities. Finally, reduced supply from mines related to the pandemic will act as an additional support of the yellow metal, likely to boost prices in the coming months. In the view of these factors, the bullish intermediate term 3 to 6 months posture toward gold is warranted. So we do see a lot of potential for gold. A lot of potential for gold, right? We look at supply and demand being the biggest, probably the biggest or the highest influencer. And right off the bat, we know that the producers are going to turn to the consumers, and the consumers will be turning into the producers. It doesn't matter if banks aren't the reason why gold prices are where they are. Just back like in 2011 when we saw $50 silver, it wasn't banks, it's the recession looming. Yes, that has something to do with it, but banks weren't the main players in the game. It was the individual investors that kept silver's price to that level. Just like it was the individual investors that shot silver's price down while everyone sold. If you can look at it from that mentality, from that perspective, you can see the reality of the situation. I don't think that banks are shady anyways. We see JP Morgan spoofing, placing false buy orders. They're trying to manipulate prices, trying to control the prices to their own greedy needs. Merrill Lynch, the Dutch bank, all got caught spoofing, placing false buy orders on exchanges, which basically what they do is they'll place an order on an exchange and then cancel the order before it goes through, so it tricks the public to think all this gold and silver is being bought up when really it's not. And then everyone else starts buying it, and then it shoots the price up or keeps the price lower, and then they either buy or sell when the price is convenient for them. It's very greedy. It's illegal. 3 of JP Morgan's employees actually got arrested for this, and it's a punishable charge now, and it's a very serious thing because it's wrong to do. And silver's price could be in a bubble from this. We know that if this is going on and people already got arrested, we know it's going on, but to what extent has this been really affecting silver's price? How much of this is, what would silver's natural price be without that? That's something interesting to think about. If spoofing wasn't going on, if we could let the natural price right out, silver could be at $30, $40 right now, maybe even higher, because who knows how long this has been going on for. We saw in the 30s, FDR changed the gold to silver ratio from 16 to 1 to 75 to 1, which is some of the earliest manipulation we've seen, So we know the manipulation has been going on for a very long time, since the beginning of the dollar. The dollar is built off of manipulation. It's built off of shadiness. That's why central banks also need gold and silver as well, because they know that their dollar is weak, that their dollar really doesn't doesn't have too much, backing underneath it, especially since we got rid of the gold to silver ratio, or especially since we got rid of the gold standard and the silver standard. So anyways, I'm going to wrap this video up here. This video kind of ran longer, so check out the next video, which is going to be coronavirus, the aftermath and ramifications on gold in 2020. For ramifications for gold. I will be going over that video. I'll probably make that in a couple hours, so stay tuned for that as well. So anyways, if you did enjoy this video, if you thought it was educational, informational, or just entertaining, make sure to smash the like button. Make sure you subscribe because I do post daily videos. This was Silver Slayer. I'll see you guys soon. Peace.